Hi, we are going to discuss now the financial statements, the cash flow, the taxes. That is chapter 3 of Mr. Brigham of his book Fundamentals of Financial Management. The first question is, what's the value of information that we can get from the financial statements? According to chapter 1, the financial managers are concerned with the long term enhancing the long-term shareholder value. But in here, we're talking about the financial statements that will give the earnings per share. That is only for the short-term value. So that's the question is that why we have to study the financial statements. So according to the simple answer is that financial statements convey a lot of useful information that helps corporate managers assess the company's strengths and weaknesses and gauge the expected impact of various proposals. So it means to say there are some transactions like with the outsides that are who are interested with your company and they rely with your financial statements to make sales decision. So it's important for the financial managers to understand the value of the key financial statements and understand those key figures that have to be looking into, because that's would how the outsiders we're going to look into your company of how well is your company run and the health when it comes to the money like that. So that's how they decide to going to buy your stocks, or they're going to lend your money. So if you're too risky, they're going to lend your money instead of buying the stocks. If you're low risk, so they can buy stocks instead of lending money. Okay. So looking into the financial statements, you could be overwhelmed. But if you know how to look into the financial statements, you can see some key points out of that. Let's say for the balance sheet, you can see the total assets. You can compare with the other companies to know how large is the company that you're going to invest. And if you look into the income statement, you will see you can compare it with the other, if there's a decline or not, or you can compare with the other companies in the same industry. If your sales is a lot more better than the other company by looking into the common size, for instance, looking into like what we call the sales turnover, like that. And for the cash flows, you can see if there are some investment by the company, or looking into the operating side, if you can assess if the company is doing generating money out of the operations or not. So that's it. So you can get some if the company is doing well or not. So you can compare that their financial statements over time, and you can see if they are doing something in the right decisions, or if they're in the right track. Then you can decide whether to invest it or not. Okay, so for example, here's a quick analysis about the Dunkin' Brands Group, released the fourth quarter in the 2016. So the company announces that the earnings per share went up to 64 cents from 61 cents. So the sales for that quarter is 215.7 million, and the company announced a dividend increase of 7.5, and they have a quarterly sales up in 1.9. That will give you a perspective of the future, that from the past year, now looking into the current quarter, the Dunkin' is doing well, but they were down with the Baskin Robbins and some other companies within their conglomerate or their group. So if you are going to review the annual, their liability, the total assets 3.2, their total liabilities is 3.4. So that's a negative one, because this to say that their equity is negative, right? But their statements, you can see that generated their cash 276 million, but they invested and also 1 million from investing activities. So does that mean that they're selling assets like that, long-term assets? So what's happening? Are they reducing their operations? That's one way on how to look into that and how to think. However, if the company they spent financing activities, like they pay dividends 176 million. So they generate operating 276, and out of that they declare, or they gave dividend 176. So that would only 100 million is left, right? though they have another 1 million for the selling of the long-term assets. So that's the what I mean. Then it follows the company overall cash position increased by 101, and you know how did it happen? So again, why it increased from generating operating activities and also from the selling of some long-term properties like that. Okay, so that's 101. Well, question is that good or not? So that's the how we don't know how the investors think about that. So every investor they have different ways of analyzing. Okay, so for what we can learn from the quick tour of their financial statements, that well, they sometimes we don't rely on the face value of the what is declared. A face value is those figures that we can see from their financial statements. So if you're a better analyst, you have to dig for the driving numbers that for in order to have a more deeper intuition and knowledge about the industry which a company belongs and what are the actions made by the company in order to generate more cash in the future, like that to pay off the dividends or to increase their stock prices. So that's it. So that's why, well, there are a lot of mixed feelings about this one. So again, their financial position is not good. They have negative, but they are having positive operating activities. So that's a good one. So might be probably that their stocks now is low and they can recover in the future and they can turn that negative into positive equity. So that's a good one. But again, it's not where the investors, the analysts are not thinking in the same way.